Hey everybody, it is your host, Rob Keens, back with Cowboy Metals Live. It is Tuesday, August 9th, 2022. Thank you everybody for joining. We'll make sure everybody gets in the room before we get started on the content. Thank you everybody. Looks like our sound check is good and we are live according to YouTube. Thank you everybody for joining. For today's program, we're going to be talking about silver, how it's being liquidated off the market, how I've been talking about this for about 2 years and predicted this would probably happen. And we're going to take a look and see whether this is really what I thought would happen. And we're going to go back and take a look for a moment at the Perth Mint piece, because last year, about this time during the summer, 𝙎𝙊𝙇𝙍, who is a CFA, and I looked at financial statements and did an exercise where we rebuilt Perth Mint's balance sheet, and we came up with some anomalies, and it forced our CEO to go on 𝙎𝙍𝙊𝙎 and answer them. We're going to bring that back into the equation today, guys, and you may not have seen those videos if you just joined the channel within the last 7-8 months, but those are going to be very, very interesting. As a reminder, we have super chats open, so if you want to throw a super chat there and get our attention, you certainly can do that, and I will do my best to answer questions in the chat as well, because this is live stream and this is where we interact with you guys, and hopefully we get to answer your questions, get to know a little bit more about you. All right, without further ado, we're going to go ahead and get this started, guys. Thank you, everybody, for joining. Ralph Potts is here. Thank you, Ralph, for joining. Grand Awakening was here. Chris Jones, Neil Hahn's Dynasty. Rhyme Time UK. Peter, of course, is riding shotgun and doing moderator duties. Thank you for joining. As a reminder, and as always, on Tuesdays, we do a poll. Today's poll is: silver is flying off the shelves at COMEX and London markets. Is this the beginning of a squeeze? Vote yes if you believe it is the beginning of a squeeze, or no if you believe not. So far, we have about 30 votes already. 86% say yes, 14% say no. I think it'll be interesting to watch going forward the next few months. Are we going to have Silver Squeeze Part 2? Or, as my friend Michael would say, Silver Squeeze never stopped. Maybe it just becomes more apparent because we've chewed through a lot of the obvious visible inventories, and now maybe people are starting to see what's going on. I think that may be the case, but that's exactly what we're going to talk about today. So we're going to start off with the Ronan Manley report. And let me get that share screen up for you guys. Now, Ronan Manley, actually, before I do that, I'm going to start with the Silver Institute. Then we'll get to Ronan Manley. The reason I reference the Silver Institute is because they give us a nice little summary of what's going on in the silver world. It's hard to track metals conclusively, but they do a really good job, probably as good a job as any, tracking flows in silver. And it's interesting, if you look at their report that came out last November, again, I'm at the Silver Institute, silverinstitute.org, on their silver supply and demand. This came out last November. I think believes it comes out sometime around every November. This is their World Silver Survey. We were looking at, essentially have been looking at, the lack of available silver in the market. In other words, the Silver Institute believes the last 3 years we've been having deficits. 4 years we've been having deficits, because they're calling this year, they think, about 100 million ounces short. So these are in the millions of ounces. So in 2019, according to what was produced and what was demanded, we ran 63 million ounces short. In 2020, they had us 258 million ounces short in the middle of a COVID pandemic around the world, in which industry was shutting down, and yet they were still demanding tons of silver. I find that to be a little interesting. 2021, last year, they said that we expect to have 116 million ounces short. And then they're calling through the end of this year expectation of 100 million ounces short. What does all that mean? It means that we have had a shortage for about 4 years running, or 3 years with the expectation of 4, according to the best available data that we have on silver. And again, it's not 100% conclusive, but it's a pretty good report that a lot of people rely on. It's publicly available. You can go look at it. They've got all the information on how they collect all this. But I just wanted to point out, we're short of silver. Now, this is a current shortage. It means what the mines are producing now and what we're using and demanding in industry, the mines aren't producing enough. Now, there were silver stockpiles, and that's what I wanted to talk about today. And that's the focus of today's session, and why we think silver is being run off of the 2 big Western markets. And we're going to document for you how that's occurring, and we're going to speculate a little bit as to who that may be, at least the type of people that may be doing that. I think it's very bullish for silver. Okay, this article comes July 27th, 2022. It's on Bullion Star. Ronan Manley is a precious metals analyst who covers mostly and does one of the best jobs I've ever seen of covering the London market in gold and silver. He's been writing for Billion Star for quite some time. He has basically impeccable research. I invite anyone to read his research, and if you're not completely blown away with the level and the detail of what he says, then I'll be a monkey's uncle. How about that? So he's talking about how LBMA silver inventories fall to near 6-year low below 1 billion ounces. He's got the chart here, and as you can see, we're down below 1 billion ounces. And I think there was an update on that today where it's actually down to 940 something million ounces. I actually recorded a session about this with Chris Marcus of Arcadia Economics, which will come out tomorrow, in which he's got the updated chart where they're down to about 940,000 ounces. But there definitely has been a runoff on the LBMA of ounces. And Ronan goes on to point out, and I think we need to talk about this quite a bit. Most of the silver in the London market's already pledged into a transaction or into ownership off of one of the ETFs. So if you're an SLV ETF or a lot of these other silver ETFs, which is a paper product which is supposed to be backed by a certain amount of silver, the London market holds most of that. So most of the silver in the London market is not free for trade. It is stored under the auspices of being owned by a lot of the ETFs, and there is a certain percentage available for free trading. We know from lots of previous research from Ronan and many other places we've done on our own on Gold Silver Pros that there are more contracts for silver in London than there is silver. And Ronan goes down to break that down. The big piece of this is that we want to know that we're focusing on here is that a whopping, as Ronan says, 15.48% silver inventories have come off the London market in the last 7 to 8 months. So he says here, quietly and almost under the radar, the quantity of silver held in LBMA vaults has been consistently hemorrhaging for about 7 straight months now. Latest data from the LBMA, and if you want to go to the article and read the LBMA data, you can. As of the end of June 2022, shows that the LBMA vaults, this is the London market, now only hold 997.4 million ounces of silver. And again, Ronan has an update, and I believe that's down to 940. But in any case, it's fallen over 15% in the last 7 months. And what did we say on our show would happen about 1.5 years ago? I fully believed there was going to be a run on silver off of COMEX and the LBMA, the London markets run by the LBMA, because I suspected that the big money was going to run to get their metal before the small guy. And you're going to get it from the COMEX, which is the US exchange, and you're going to get it from the London exchange because they have most of it. And if you're talking about industrial demand, that's where a lot of people get some of their silver anyway, if they don't get it under private contract. So once you start to see the LBMA hemorrhaging silver and you start to see COMEX hemorrhaging silver, that means the big guys have gotten into silver, okay? If nothing else you get from this video, the big dudes, the wealthy people are getting into silver. And I wanted to give you a couple of anecdotal pieces of evidence for that before I get into COMEX. So we'll get into COMEX here in a minute. But I wanted to break out, first of all, I'm gonna check on you guys, do a sound check. Everything's good. Thank you everybody for being here. Remember, super chats are open and we have a poll. So talking a little bit about what's going on with the retail market, I just showed you the London market and how silver is being pulled off in bulk. I'll show you the COMEX in a minute, but anecdotally, there have been some rather large gold and silver sales coming through the retail market. Andy Schechtman from Miles Franklin was on my program a couple of weeks ago, in which he divulged a sale of $50 million of precious metals to a single Texas billionaire. It was a lady billionaire in Texas. That narrows it down. There aren't too many lady billionaires in the state of Texas. And it was $50 million. 900,000 of those, he said, were going to be American Eagles. And the balance of that 50 million would be done in gold or perhaps other silver pieces. And Andy did not say who it was. He kept his customer confidentiality. I want to make that clear. But I've talked to several people in the industry who were involved in buying and selling of precious metals that would probably know this, that have their ear to the ground, in which they told me, and I can't give these sources away, but they told me they thought it was Alice Walton of Walmart fame. I don't know. I can't confirm that. That's what I was told by several sources. It would be interesting to see if that's it, but that's pretty darn big. And really, we had coming through Ark Silver, and I'll talk about Ark Silver here at the end. Ark Silver, our friends over there, Ian Everard runs this business, been running for several years. He gets the cheapest premium silver you can find, and he offers it to people and sells it. And if you guys, come through Gold Silver Pros. Of course, that helps the channel. He did a $3 million order of gold and silver that went to somebody in our network, somebody that watched our show, came in through Gold Silver Pros and ordered $3 million. So we're starting to see these really big buys. And before that $3 million order, we had almost a $500,000 order. So we're starting to see the buys amp up, the retail amp up. So it's not just the industrial demand that you see coming through the markets. We also see it in the retail demand. And I think that's why premiums are high. This year, we've had the highest percentage of silver premium. So if you want to buy silver, you paid a higher markup as a percentage of the price this year than you have at any time that I can recall in the silver market for data that I can find. So silver premiums are up, why people are buying it. And we go back to the presentation, we're going to show you where and how, and it's coming off the market. So we're here at Nick Laird's site, Gold Charts R Us. He does the best collection of data that I've seen in this industry. And I wanted to point you to the silver warehouse stocks. You can see that they've come down. So basically, since Silversqueeze, these stocks have come down from about 400 million ounces to about 340. So we've seen 60 million ounces come off. That's a fairly good amount of metal. But what we really see, even though the overall stockpile of metal is coming off, there's less available silver on the American exchange. What's really happened is there's basically two buckets for that metal. There's eligible, which is light green here, eligible stocks, which doesn't get traded. It's actually private storage. It's actually metal that's just sitting in a depository that happens to be COMEX approved, but not owned by COMEX necessarily. That is a private storage. So we don't know how much of this those people would be willing to give up. It's like, say, they have an old Ford Mustang, 1969 hatchback Mustang. You want it, but they're not giving it up because they own it. You have to convince them to give it up. Same thing with silver. They own it. It doesn't belong to the COMEX. It's not eligible for delivery on the COMEX exchange. And those inventories have been going up. In other words, people are net taking silver off the COMEX and putting it into storage. Some of that happens to sit in COMEX depositories. Some of that happens to sit in London. Some of that happens to go into independent vaults. But the key here is to know that what people are putting up for trading or what is liquid on the market that you can actually get is here. So think about housing for a moment. We'll use an analogy. Let's say that you have a robust amount of houses. Then that's what happened here. You have this robust amount of houses. Prices will probably go down a little bit. It'd be probably pretty good demand. When the supply of houses falls and there's not as many, prices are going to have to go back up. If we ever had a housing shortage, that's what would happen. Same thing with toilet paper at the grocery stores during COVID. It was hard to find, prices go up, it takes time to alleviate that. That's what's happening in silver. We have this big runoff in silver, and specifically the liquid portion of the American market has really been run off. And again, another way to look at it, here's the registered runoff since Silversqueeze. This is Silversqueeze right here. Boom, big runoff. And it's not retail buyers doing off the COMEX, it's the big guys, wealthy family offices, wealthy individuals, companies are demanding tons of silver, and it's being run off. So it's being run off of the COMEX and the LBMA at the same time. Again, not to toot my own horn, but I predicted this about 1.5 years ago. I said it on my channel. I expected this to happen. Even a lot of the people in the precious metals industry says, I'll believe it when I see it. Well, guess what? It's happened. My question is this the start of the second part of Silversqueeze, phase 2, what I called phase 2? What I said would happen in phase 2, if you remember my broadcast on 𝙎𝙊𝙇𝙍 Economics and on my channel back during Silversqueeze in February, early February last year, I talked about how I expected that a lot of the silver would start to roll off. People would actually take it off the exchange. And the reason I expected that is because I said when people secure their silver, they're going to want it in hand. Some they'll leave on the exchange, some they're going to want to take in hand. And that is exactly what has happened. And I said there would be phases. I said phase 2 would be people stop buying the paper products like SLB and some of the other ETFs, and that they would gradually shift over to physical demand. And we can clearly see that happening. Physical demand here. We've had physical demand off of silver, off of COMEX. And again, big sales in the retail market popping up all over the place. Billionaires and millionaires with money buying lots of silver. Gold too, but lots of silver. The next thing, a piece of information I wanted to put out there for your edification is the actual physical report on COMEX. So this is the report that come out on the silver future. It comes out on all the metals. We're here on the silver futures. how much has been delivered. So just to get an idea of what's been delivered this year, look at how much has been delivered. These are monthly totals. This is a huge amount of silver. And when you see these numbers be as robust as they are, that's why you see this number falling. Okay, this silver is being taken off, and you can see it right off of the report from CME Group, who manages those markets here in the US. So it is physical deliveries, it is being taken off, and they're not leaving all of it in private storage. There's been a net removal of silver off of the actual depositories, whether it's private storage or for trade. And I find it interesting that this has occurred about the same time, if you remember back to previous reports, that the paper positioning on COMEX has changed. Okay, so let's summarize. The physicals come off the market, off of COMEX in London. At the same time, the bullion banks, which we consider the smart money and precious metals because they basically dominate that paper derivative trade, you know, those futures trade, they have switched positions. The bullion banks have gone net long silver. So think about what we're talking about. What has held the price of silver in a range for the longest period of time? It's been the derivative pricing, and it's been the gambling on what silver will be, and it has nothing to do with physical market. So you can have a robust underlying physical market, but the spot price that you see is really the paper trading. We've documented this so many times on this channel, and it's a fact. I mean, it's an undeniable fact. And so you have a low price because there's a lot of paper. It's people gambling the price won't go up. It has nothing to do with physical reality on who actually wants silver, who's buying silver, who's using silver, how much is stored here versus there, zippo to do with it. So you had these prices low because the bettors don't really care. They're just trying to make money they're trying to squeeze it for some juice. They're trying to make money on the trade. But the bullion banks have gone net long. And I think what the bullion banks are seeing, in my opinion, is they're seeing the silver come off. They may actually be liquidating the silver, because think about the COMEX. They can pull the silver off for their clients or even for their house account. So they know, they have all the data. At the same time, the silver's been coming off some Silversqueeze, they flip net long. And now we have the silver coming off the London. Well, how does that going to affect the ETFs? If you're investing in the ETFs and all the silver is coming out of London, are these ETFs going to be supportive for future demand? We're just assuming that if you own SLV or one of these other silver ETFs, that there's silver backing it. And that's a big assumption. What happens if there's a run on the ETFs? It'll bankrupt London like bam. And then they'll come over to COMEX. And then after COMEX is drained, which is already being drained right now, you've seen 2/3 of the registered inventories come off, 150 million ounces to 50. I don't think it would take that long to grab it off of COMEX either. If you look at the Silversqueeze last year, and that ran right now, you would bankrupt the silver available on COMEX right now if we had another Silversqueeze. And looking at what they have in London, it seems getting thinner as well. Now, this is a trend we have to watch. It's not, a guarantee we're going to go to Silversqueeze 2 again, but I think this may be the beginning of it, of phase 2 that I talked about over a year ago, about a year and a half ago. And I talked about this is what would happen. People would move to physical. You would start seeing this come off the COMEX in the London market. You would start seeing big whales come in. Everything that I just said, those 3 points, I've documented on this show for you. All 3 things have happened. And again, I predict this about 18 or so months ago. So now we're seeing what I thought would happen. It's right out there in front of everybody. And it's good to see a little bit about that. Now, I wanted to talk a little bit about who may be involved in the market. I'm just going to throw a chart out there that my friend, Dave Kranzler, put on his blog on investment research dynamics some time ago. And we'll get over to that. And I'm just throwing a new little piece of information out here. This is from the BIS, Bank for International Settlements. This was in a presentation done some time ago. I believe it was with a slideshow from a June 2008 seminar and from the Bank for International Settlements. And in this slide, let me blow this up just a bit for you guys. You can see here that the BIS is involved in the Forex and gold services market. Now, what would the central bank of central banks be doing in the gold market? I understand them being in Forex because they're basically a central bank, or at least I understand the basic reasoning for it. Now, as to what they do, I find interesting, because how could a supranational agency be involved in intervening, as you see the word interventions here, or getting involved in, or mucking up, if you will, or changing the general flow of the Forex market when they're not the American Central Bank or the European Central Bank? What is the BIS doing there in the paper currency market, the Forex market? Forex is the dollars and the yens and the yuans and all that. Why are they intervening in that market? And why would they be intervening in the gold market? So when you talk about the paper trade, see, they more than likely are trading in the London and US markets, the futures, and they're intervening in there, okay? They're part of the group that's going in there and setting the spot price. So it's not just the JP Morgans of the world and their clients, it's also the BIS. And the question is, why are they intervening? And why was this in a June 2008 slideshow? Because think about the timing of that. June 2008 was right before the big crash. Because I remember that very clearly, or they were talking about Lehman at the time during that summer. And the BIS comes out and saying, yeah, we're intervening in Forex and gold services during a time at which the world's going through a lot of chaos. There's a lot of debt issues, mortgage market meltdown. What role did the BIS play in that, if any? Why are they involved in this market? So what's their role? How does that distort markets? Very interesting. But just the timing of this presentation, what was going on in the mortgage market, I find to be interesting. And I'll leave that to your imagination as to what may be going on there. Okay, I'm going to come back to the stream, guys, since we're doing a live and checking on the, oh, we're doing really well, 370 people in. We do have a super chat from 𝙎𝙊𝙇𝙑𝙬, in which he says, Martin Armstrong, and for those of you who don't know, Martin Armstrong is a very famous analyst who runs his own analytical service on the global economy, writes a lot of places, fully recommend you guys read him. So Martin Armstrong has September as a panic month, and many. Also, you have 2 CPI readings before the next FOMC meeting. Yes, that is correct. So Martin Armstrong is saying panic month, and I think he's meaning in the markets in September. And then you have CPI readings in the FOMC, so stuff could blow up. And I think 𝙎𝙊𝙇𝙑𝙬's point there is, as stuff blows up more, that could be the catalyst for another silver squeeze, and that could bankrupt the market. So, you know, is that around the corner? Is it longer dated? I don't know, but that's a nice little piece of information, 𝙎𝙊𝙇𝙑. Thank you for sharing that. Real quick check of the poll, and then we'll go to the last piece that I want to talk about in terms of who may be involved in moving some of this metal around. And we're going to go back to 2020 when I do it. Give me just a sec to get there. I'm going to go to the poll. In the poll, 78% of you say, yes, this is the beginning of silver squeeze, or phase 2, if you will. 22% say no. I think that's a pretty good reading. William DeBelter has a comment. He says, Rob, how much silver has JPM in their private vaults that they can throw into the market? Last time I looked, it was like 140 man ounces. I have not looked in forever about their personal, because I don't know how you separate that out versus their client account versus what may be rehypothecated. So yes, JP Morgan has a bunch of silver. I don't know how much I have right now, is over 100 million ounces recently. As to what that could be pledged or used for, I don't know. But that does go into the total COMEX number. How much of that could be free? I don't know. What's in register right now is a lot less than JP Morgan stockpile. So you have to assume that a lot of what's in JP Morgan stockpile is not liquid, you know, based upon the numbers that were provided by CME Group for that market. But I don't know, it's a really good question. Thanks for asking. Okay, last bit here, guys, of this presentation. Silver is being aggressively liquidated from the open market. We did talk about how it's being liquidated off the London market. We showed Ronan Manley's research. I've been talking about how it's going to be liquidated and has been liquidated off of the COMEX for the last year and a half, and we showed that research. I also want to talk about this video. So this is an interesting video. This piece is, Daniel and I did research last year. Daniel, if you don't know, Daniel Vigario is a CFA, who's one of my followers. And last year during the summer, we did like a 5 or 6 part Perth Mint series. He, having a lot of experience to do this, reconstructed from their public financial statements a trial balance sheet to see how healthy are in their inventories, how much money are they making, all that good stuff. And we did a series of reports on it. I'm a former auditor, so I understand how to read this and interpret it. And so we took Perth Mint's publicly available financial data, and we found out that we thought that they were running about $930 million Aussie short of precious metals, that their customers had bought it, but they had either lent it out or rehypothecated it, but it wasn't there. And those reports led to a fairly big scandal where the CEO, Richard Hayes, went on 𝙎𝙄𝙇𝙑𝙬 to dispute it. And in this particular video, we're talking about, and let me share the screen here. In this particular video, we're talking about, he gets asked a question by 𝙎𝙄𝙑𝙑 about, first of all, about the inventories, which I'll play. And why does 𝙎𝙄𝙑𝙑 think that it's not short? And if you want to watch a whole video, Daniel and I tear this apart. It's basically a lie or a misrepresentation based upon the data that they have in their financial reports. But more so than that, the important part of this video clip from our Perth Mint series last year, this one premiered on June 23rd. It was like the second or third in a series of like 5 that we did, dating all the way through September on the Perth Mint. In this particular video, Richard Hayes, the CEO, mentions that the people that were on the other side of this trade, which Perth Mint had lent out essentially, or given away the precious metals to be gotten back later, had gone to S&P counterparties, in which, in other words, if you interpret that, it means that Perth Mint probably bailed somebody out. It's either a big company or it's the exchange. And so I want to play this clip real quick, and I want you guys to listen to it. Some of you may have not been on the channel last summer, and this is a really cool series if you want to look at it. We think that Perth Mint basically ran short almost $1 billion of metal and didn't tell their customers. And that's a big, big thing, because if it happens at Perth Mint, it could happen other places. It means that there's probably more of a shortage of gold and silver out there right now than we know. And it's all being covered up by the way that the gold and silver is moved about on balance sheets. And so I think that there is a bigger squeeze coming, not only silver, but gold. And I think this video talks about it. But let's listen to the S&P counterparty argument that they have, and a little bit of the commentary that Daniel and I have.
We'll get onto just now. So 2448.
Yep. So this would be 2 big points we make after this, and some of the biggest points in the video we're going to do. Here we go.
Processed and precious metals inventories held at the Perth Mint, less metals held in the NYSE. Can you explain what that means and how that relates to the inventory items stated in that table above here? Does it, if I'm interpreting this correctly, does it mean that not all the inventories on that, as part of that $5.98 billion, not all of those inventory items are physical metals in the vault? Some of them could be receivables. Am I correct or incorrect there?
The 5.9.
Basically, what I'm trying to get at, Richard, is the $5.98 billion, which is, according to your statements, it's metals marketed at fair value. Is that all
Correct. Physical
metals in the vaults owned by Perth Mint, or could some of that be receivables from maybe your suppliers or for unrefined products?
So that comprises of 2 additional amounts. One is advances to refining customers, where we have received the metal from the mine site, and we have advanced. The customer has priced that metal, and we've provided an advance to the customer in advance of the refining process being completed. The way the markets work here in Australia, and I think they probably work this way globally, is that all refining settlements are done typically on a T+2 basis. So we receive the metal today, and in 2 days' time, we will provide the customer with payment for that metal. It's in our custody, so we physically have it, but we haven't refined it yet. The final refining, that takes about 10 to 12 working days. And once the refining.
So what he's talking about here, and I'm just going to interject for a second, he's talking about work in process, which is metal that comes in and goes out, and it's a T+2. And that's a very short-term thing. Yes, they do get metal in and they do something with it, but that's not for an entire year's financial statement. So he's trying to say, well, this is the marginal metal that we get in. Of course, that doesn't account for almost $1 billion of missing metal, but that's his excuse. But continue to listen to what he says.
Process is complete. We have that metal in a form that is then a saleable product. So typically that's an advance given to customers prior to the refining process having taken place, but we have physical custody of the metal. The second part of that.
And again, we're not talking about metal he refined and produced by Perth Mint. We're talking about metal that Perth Mint loaned out to someone else and had no physical possession of. That's the difference.
That is where we have stocks with customers, and these are all customers where the stock is either secured by a banker's guarantee.
We'll stop right there, I think.
Hold on, keep going to the S&P. Keep going, Rob. This is important.
Oh, you want to do the S&P in here? Okay, we'll put that.
This is very important. Keep going.
Keep going, guys.
Or a cash deposit, or in a few cases where the customer is deemed to be credit worthy. In other words, they have an S&P credit rating where the stock has been provided to that customer on a consignment basis, but that stock has not yet been priced yet.
Okay, and that stop. Right. I'm going to now share my screen.
Where do we start on this one? Okay, so what Daniel and I go on to talk about in this video, I fully encourage you guys to listen to that video where we basically show Perth Mint was running a fractional reserve scheme according to their own financial statements. We're not accusing them. That's according to what was in there. We talk about that, and we talk about essentially how they got away with it and how they did it. And my question is this: if it's an S&P counterpart and what that means is it has to be a big bullion bank, a big company, an exchange, somebody with that level of gravitas. They could be an S&P rated counterparty, which he admitted was the case. Let's go back and look at the inventories that we see at COMEX. So let's say, for example, you're COMEX and you need to beef up your silver supplies. And this was from the 2020 report. So this is the report they're talking about at the Perth Mint. Notice how all of this metal comes in to the COMEX at about the same time that Perth Mint releases its financials and says that there is $1 billion. We find out there's almost $1 billion Aussie gold and silver that from previous periods have been lent out to somebody. Did that get lent out from the Perth Mint to COMEX? Did it get lent out from the Perth Mint to LBMA to deal, with a potential squeeze going on for Silversqueeze or demand for SLV? Who did the Perth Mint bail out? We know they bailed out somebody. We don't know who. Could it be one of the exchanges? It's entirely possible. I don't know. That's speculation on my part, high octane speculation, if you will. But we do know the flows were such, and Ronan's documented this. At one point in time in 2020, there was a bigger flow of metals from the UK to the US than we ever saw in history. Usually it was the other direction. So the metals from the UK to the US had reversed course from one side to the other. You had Perth Mint bailing somebody out, or a group of somebody's out that was S&P counterparty rated. You had a flood of metal go into the London and COMEX markets. And was that metal from Perth Mint and other places that was already owned by someone else? It was just rehypothecated and pledged to support those markets. It certainly seems to me that looking at the flows and how they've changed indicates that those markets were bailed out. It may have staved off a collapse of the COMEX in silver and gold, but yet the players are back at it again and they're liquidating silver again. Now, they're liquidating silver faster than gold, but both are being somewhat liquidated. Gold has come off the COMEX as well. What does that mean? Are we in silver squeeze? I don't know. There's a bunch of different points of data there. But here's the thing. It's blatantly obvious that the flows have been put in forth such as to cover potential supply shortages. It's blatantly obvious that people are taking the metal off at a retail level and an industrial level. Given the financial situation that we have and a rush to precious metals that would ensue, assuming, high interest rates, declining economy, wars going on, de-dollarization, all of these things that will put tremendous pressure going forward on our economy, on our currency, on the value of our investments, on the stability of our society from an economic perspective. How long would it take to liquidate those already declining inventories of silver? I don't think very long. And that's the picture I want to paint for you guys. And it's a picture that dates back a couple of years when I first started covering it. I said, we're going to have a run. We had a run. And we're having another one. This is the second run, okay? And I said that we go to phase 2 and it'd be more physical than the ETFs. I was correct. There has been some liquidation from the ETFs, but it's bigger on the big exchanges. I said, will we see some whales come in and buy big amounts of silver and gold? That's exactly what's happened at the retail level. It's not the conclusion of the run. I think we're probably in the early stages of what I call phase 2. What I'm going to brand as phase 2 of Silversqueeze. But that's what I see. I think it's so obvious. I don't know how, I don't know what argument can be made against that that's what's happening. Now, what are the reasons for it? Who are the players? That's what we don't know. And that's where the speculation comes in. But I do think that some of that truth is going to come out eventually. I do think people are going to talk about it. And I think Ronan will do great research. Chris Marcus from Arcadia Economics will do it. Rafi Farber, one of my good friends from Seeking Alpha, will do it. I'll do it, well, I'll do it. But it's pretty damn obvious that silver's coming off and there's some sort of run going on. How long they can last in light of all the economic problems and geopolitical risk, I don't know. The one question I have, specifically with silver, and I'm going to throw gold out. I'm not talking about gold. Gold's a little bit of a different animal in terms of available inventory. But in terms of silver, where are you going to get it if you have a run? If you have a 3-day run in SLV of 110 million ounces, where the hell are you going to get it? How much of that is truly free? The next phase of Silversqueeze, when it began, if it hasn't already begun or it hasn't been going for the last few months, that phase of Silversqueeze, I said last year, and I'm going to say it again, is going to determine whether we have the death of the COMEX, the London markets, and how much metal is left. I said that would happen. It looks like we're right smack dab in the middle of this bad boy. It ain't stopping. It's motoring along. It's obvious in the details. We'll just have to see what happens. And after, I think stories are going to come out about exactly who it was. I gave you some clues during the presentation for sure. The BIS, of course, intervenes in those markets. You have to think if the BIS is intervening, why the central banks would not, when the BIS basically represents them and is like a policy lead for them, along with IMF. You would have to say that probably each of the sovereigns is intervening. If you want gold and silver and you're China and Russia, why in the heck would you not draw down the Western industrial markets? It gives you the advantage. You have the metal. Think about the current conflict and the sanctions with Russia. Why wouldn't they be rushing to get their hands on every darn metal energy product that they could for the coming conflict with the US? Whether it's just a Cold War or a hot war, at the end of the day, they're going to want stockpiles. And you're not going to exempt the metals from that. Why? Because the metals are true value. It's true money. It's the bottom of 𝙎𝙇𝙇𝙍 pyramid. What is 𝙎𝙇𝙇𝙍 pyramid? A central banker came out years ago and said, you know, when you look at value in the economy, you start with the precious metals on the bottom. They are true money. Everything on top of that, including the dollar, stocks, bonds, et al., are derivatives of the metals. The metal is true value. It's true money. What are we moving back to right now? We're moving back down the layers of 𝙎𝙇𝙇𝙍's pyramid. All the garbage, the derivatives, the stocks, all that stuff is collapsing. Where are people going to go? They're going to the metal. Why is it not reflected in the prices? Rob, it's not in the prices. I don't care what you say. It's not in the prices. The prices are the true market. That's what people tell me all the time. No, it's not. The prices are not the true market. The prices are spot prices set by two different markets, London and COMEX, in which it's 99.9% paper trading. Nothing to do with industrial demand, nothing to do with physical demand. And I've shown that percentage of trades settled in physical on the COMEX before, and it ain't nothing according to what the paper trade is. The reason you don't see the paper prices moving is because it's a sideways market in which the market's not caught on to the fact that there are shortages. We know there's shortages. I just showed you the data. It's blatantly obvious. So we know what's going to happen before a lot of those market participants happen. That's why, in my opinion, and I'm not your financial advisor, consult your own, do your own research, all of that disclaimer I have to put out there. But in my opinion, what I'm doing is I'm buying the precious metal. I see that squeeze coming in silver, and I think it eventually will go to gold when you get the big geopolitical problems and the big central banks and big money comes into gold. We're not there yet, but you clearly see it industrial in silver. You're clearly starting to see it from the retail side in silver. This is part of, I think, phase two, what I dubbed phase two of Silversqueeze last year. I think we're here. I was on Chris's show. I was on tons of show talking about it. I think we're here. The data is clear. And I think if you're a precious metal investor, this is extremely bullish. And that's, again, why I don't just sit here and quote price to you all day long. It's not a physical market. It's a paper market. That price would allow you to get cheaper if you believe there's going to be a physical run. Because I guarantee you one thing. When there is a physical run on silver, the paper trade is going to blow up. Because all the participants are going to say, wait a minute, now we have a physical shortage. I'm going to go long on that paper to make money. Because that market is in deficit. And traders are going to dump their shorts and they're going to go long, and you're going to see that spot price rise. The factors underlying the demand for physical silver are already extremely bullish. The price will come after. It's how that market works. And I just want to explain that again for people. Price is not the indicator of what's going on in the physical trade. Price is a lagging indicator that comes after we figured out what's going on. with the physical trade. And then all of the market, all the guys putting their money on the paper and making their bets on the future price, or obviously with a shortage, gonna go long. The bullion banks are already there on the COT report. We've shown this in past iterations of the COT report. They're already there. So the positioning has completely changed. The run on industrial has begun. We're seeing big orders in retail. I think it's clear where we are. All right. Thank you, everybody, for being part of the program. I'm not done yet, because if you want silver, I'm going to show you one of the best places to get it. And that's from my friend Ian at Ark Silver. Now, if you do get silver from him, it does help the program. We do get a little bit from that. And we do have lots of expenses, employees. That does help. Appreciate everybody. But the reason I'm so excited about this is because, you know, when Ian and I became friends last year and decided to do this together, and he had started this company, and I said, hey, I'll help you, you know, market it because I believe in what you do. It was for a bunch of reasons. One, I broken bread with Ian and his wife and sat with him, and he's a good guy and I like him. He's doing this for the right reasons, I believe. He wants to get silver in the hands of people, you know, the best way that he can. And so that's why we have a partnership with him. And he has got a quick little video down here that we want to play for you guys, talking about a little unboxing that he has of some silver he got from Silverback Precious Metals and Jim. I'm going to play that for you guys.
Here we go again. I had a package from the wonderful Silverback Precious Metals. The first ever from the wonderful of 10-ounce cast rounds. So these replace the hand poured from the pictures I've seen. There we go. So that is the classic design. And on the back we have the bar number and the year and the serial number. So each one is unique in its own right. So I'm guessing I'll have to keep one set. So I have a set. That is the Slice Gang design. Off the market, you're helping artists who make the designs. So these ones are United We Stack. And two more. Generation Silverback. Yep, could be my favourite.
Beautiful.
Well, thank you again, Jim Forsyth, for all this silvery goodness.
Thank you again, Jim Forsyth, who runs Silverback Precious Metals and Citizens for Sound Money. He is a very honorable gentleman as well. What he does is he buys bars off of COMEX, the 1,000-ounce bars. He slices them. You can buy those slices through Ark Silver if you want. He'll do the retail end of that. And from cutting it, all the silver shavings go into those 10-ounce bars. So those bars that you just saw that Ian had put on screen are the shavings from COMEX bars that Jim cuts up. You can get all that at Ark Silver if you want. I'm going to show you guys how to do that real quick. Again, if you want some of the cheapest silver available on the planet, I'm going to show you the way to get it. You go to goldsilverpros.com. That's our website. You click here on Precious Metals Deals. It takes you down to a form. You click on Access Deals here. And on this form, you can contact Ian. You just put all your information in. He knows it comes from Gold Silver Pros. You want to whitelist his email address and his phone number because that's how he's going to get back to you. He's going to text or email you within 48 hours, and he will show you how to get some of the cheapest silver you can on the planet. And again, it could be the hand-poured bars or the slices from Jim at Silverback that came from those 1,000-ounce COMEX bars, or it could be other silver that Ian has sourced. You can get the 1,000-ounce bars. I bought one last year, got it drop shipped to me. It was the cheapest 1,000-ounce bar you could find on the planet. But he also has kilogram bars, other types of silver and gold. If you're interested, Ian basically gets it the cheapest that he can, cuts out the middleman, and passes the savings on to you. I've had many, many, many very happy customers, including one that just ordered $3 million worth of metal. That was one of my followers a couple of weeks ago that's very, very happy with their purchase. So anyway, wanted to put that up there for you guys. Looks like we had about 450 in. That's going to do it for tonight's presentation. This has been silver is being aggressively liquidated from the open market. And in that market, I mean the COMEX and I mean the London market. And I think it's pretty clear we're deeper into Silversqueeze and into what I dubbed last year, part 2. And the most interesting part and the fun part, we see the data about the stuff moving around. We know that there's a lack of available silver, a shortage, if you will. But what's really interesting, the most fun, is who's doing it. Well, I brought back the Perth Mint series from last year. We're the ones that exposed that on our channel based upon their published data and the comments from CEO of Perth Mint at the time. He's no longer with Perth Mint, by the way, at least not in the CEO role. He was let go after our series. But it's interesting to see that his comments as S&P counterparty risk, and that he admitted that they lent metal out to other people, but that he downplayed how much. And I think that they were lying about that. He tried to say it was more work in progress and it wasn't big, but based upon the accounting that we did of their financial statements, it was $930 million Australian. And I think it's pretty clear that they were bailing somebody out. Was it the COMEX? Were they giving it to one of these big bullion banks? Were they giving it to another mint? We have no idea. But it's clear the way that metal is sloshing around, you see these big, almost $1 billion amounts of metals sloshing around on these markets. People are getting it. To me, what that means is people that need it are getting it, whether for industrial or investment use. And that's clearly what's going on. And I think it's clear in the data. All right, that's going to do it for today, guys. Thank you so much for joining the program. Thank you, Peter, for riding shotgun, being moderator. Thank you, everybody else, for being here as well. We had almost 500. This is a very popular live stream, and it should be, because it looks like we're in the squeeze again. We'll have to see if that trend continues. Of course, you can tune back in every Tuesday, 5:30 p.m. Central Time, 6:30 p.m. Eastern Time. Well, I'll do more lives, and I'm going to cover the markets. I'm going to tell you where the metal's moving. I'm going to tell you who the players are as best we can tell. We'll do the COT report. We'll tell you what's going on in the precious metal market. It will help you get positioned for the next big move, which I believe is coming. The data is there, guys. Be smart. Look at the data. Do your research. Position yourselves where you think that market's going ahead of everybody else. Because when everybody else and your cab driver, and they're talking about on CNBC, the lack of silver, it's too late. We're already in the next big squeeze. You want to position yourselves now if you feel like silver is the right investment for you. Thank you, everybody, for joining the program. We appreciate it. Till next time, Rob Keynes, Gold Silver Pros.